Guys, I have to say sorry. I have to say sorry that I didn't publish this video a bit earlier. I actually prepared for publishing this video earlier, but I didn't have the time. I had to make the Alex Becker video. So there was a recent pump and dump by Alex Becker that we anticipated. Feel free to check that video out. This video though is about Bonk. It's not about Alex Becker. And in case you're new to this channel, we talked about Bonk for quite a while. The first video was published on the 20th of November, but several others followed then. The 20th of November is here, by the way. Now, I prepared this video when the chart looked exactly like this, but unfortunately it doesn't look like this anymore. The chart has already seen quite a bit of a dip. Now, I don't want to drag this video out further than it needs to be. I want to show why I actually turned bearish on Bonk yesterday evening already. And I actually shared this in the public, in the free Telegram group. James asks, what's your thoughts on Bonk, Gerhard? I see your video lately, but now it's just not seem to be pulling back. As in, it was simply just rising and rising and rising, right? Here came my reply. I'll do another video update today. Yeah, unfortunately not, right? It took another 12 hours. The perpetual futures volume is rising dangerously high. A lot of people are in it with short-term leverage now. Now let me show you what I mean. You can always use this approach for any massive rally. When you see a massive rally, you want to look at the derivatives market. You want to look at how many people are in it with massive leverage. Because if you use perpetual future contracts, you get onto this asset with a lot of leverage just speculating on the short term. If you're long-term interested, you buy spot, right? You buy the asset. If you simply just want to short-term trade, you buy futures, you buy perps. And both on CoinMarketCap and CoinGecko, we can see the trading volume of those perpetual futures. And if that's very high relative to the current floating tokens, there's a lot of short-term speculation in that token. And that's dangerous. You don't want to have a lot of short-term holders that are simply in it just for a few minutes, maybe a few hours, that can then afterwards dump, right? Because that's the problem. People that just take the current momentum and subsequently dump will dump on you if you hold longer than them. Have a look at the following. This is the CoinMarketCap page. And when you go to a page like Bonk and you scroll down, you see the markets. And you want to look at the current market cap, not the fully diluted market cap, but the current market cap. It's currently at 870 million. Now look at those volumes over here. We have selected all the markets with the perpetual derivatives. So those are those highly speculative, highly levered instruments. That's different to the spot market, right? The spot market over here simply just shows where you trade this directly on the exchange. The perpetual market is where actually all of that short-term speculation is in. And when those numbers here, when you add them all up, are larger, potentially even a multiple of the current market cap, you know there's simply just a lot of speculation frenzy with leverage on that token. Now, of course, it's fine when there is speculation, but it's not fine when all of that speculation is in short-term levered contracts. Because you don't want to be in those short-term leveraged instruments. You have financing costs here that are astronomically high. So you never get into a contract like this holding this for several weeks. You only get into perps if you want to just jump in and jump out very short term. And if everybody is doing this, a lot of people jumped into this short term and they will then dump on you later. We see this very often at the end of a rally. We see a lot of perp future interest, and that's dangerous. Now, the only case where this might not be a problem is when a lot of perpetual futures are betting on falling prices. So when the financing costs for short positions are very high. In that case, the price might further rally, because in that case, the centralized exchanges and the whales might buy up the token further, liquidating all the people that bet on falling prices. That's not the case though, what we see here for Bonk. For Bonk, we've got all of that trading volume, but especially for the largest exchange here, Binance, financing costs aren't massive whatsoever. If for Binance this would be a massively negative number, say -2% or so, then you definitely want to long the token. Then you definitely want to buy the token, because then simply too many people are betting on falling prices. And then there's simply too much incentive by the whales to further manipulate the price up. But again, this is currently a very diverse funding rate environment. Some centralized exchanges are positive, others are negative. You simply just see so much trading volume, and that's dangerous. All this short-term speculative money in the market. Now, I don't know where Bonk goes from here, right? I do not have a crystal ball either. What I want to do on this channel is simply just present you with more data and present you with approaches that you can use in the future to have a more refined view of what's going on. Now, if this is your first time here, feel free to subscribe. I publish videos regularly. And if you got some value out of this, give this a like as well. It helps the channel grow. I've already mentioned it quickly, but here I mention it again. There's a free Telegram. The link is down below.